Afternoon, everyone. Thank you for joining us today. I'm delighted to see so many financial professionals gathered here. Your presence demonstrates our industry commitment to innovation. AI is no longer a distant concept. It's transforming how we work right now. The financial sector stands at a critical juncture. We face mounting regulatory requirements, market volatility and persist. Customer expectations are evolving rapidly. Traditional risk management approaches simply can't keep pace. The government has identified AI as a core industry for Hong Kong's future. ASTRI is proud to support this vision through our AI Empowerment Seminar Series. But technology alone won't deliver transformation. We need collaboration. We need knowledge sharing and practical solutions grounded in real-world challenges. That is why we are gathered here today. Over the next 2 hours, you will hear from exceptional speakers. The Hong Kong Monetary Authority will share regulatory perspectives. Industry leaders from HSBC, Deloitte, and Tsunami Labs will offer practical insights. We have assembled experts who are actually implementing AI solutions, not just talking about them. You will discover how AI is enhancing risk detection, how it's improving decision-making speed and accuracy, how it is elevating customer experiences while it's maintaining robust controls. Our objective is clear. We are driving efficiency, safety, and sustainability through AI and data analytics. We want Hong Kong's financial sector to lead, not follow, to set standards, not merely meet them. The booths you will see today showcase cutting-edge developments in AI, risk analytics, and sustainable finance. I encourage you to explore them after the seminar. Before I close, I would like to emphasize that risk management has always been about anticipating the future. AI gives us unprecedented capability to do exactly that. But tools are not only as good as the people widening them. Your expertise, combined with AI's power, will create genuine competitive advantage. Together, we will shape how AI transforms financial risk management in Hong Kong and beyond. Enjoy the seminar. Thank you so much.
Good afternoon, everyone. So thank you so much, ASTRI, for inviting me. So in the next 10-15 minutes, I will try to get sharing from the perspective of regulator, supervisor. We've been observing some of the development in the AI industry. So we hope that we can share some of these observations or developments in the latest domain within the risk management and financial services. So talking about artificial intelligence, talking about AI, I think a literal thing that we are now always doing is talking to AI. So we're actually talking, chatting with AI. I'm not sure if some of you have already set up your own lobster open claw. I think just some of you might have. I have done one for myself as well. Not at work, so it's not connected to the HKMA. So it's just purely on my own, like standalone devices. It even has its own standalone network. So that network connects only to that open claw system. So I've been connecting it to my WhatsApp. So I've been chatting with him, asking, I'm using him, but let's make it an it. So I'm chatting with it. I was just asking, things that I wanted to help me with. I actually did a quick check. I actually sent a little more message per day than I send message to my wife. So my wife is not here, so I will share that fun fact. But I think some of the things that AI is able to do with some of its more agentic capability, what OpenClaw is doing, it helps some of the things that can hardly be done before, including some of the things that I've been asking my team. I'm also looking after supervisory technology. So what Dr. Sun mentioned, we are using AI as well. So I'm actually wearing 2 hats. One, we are using AI for our internal supervision. We're also promoting the adoption of AI, looking after the AI adoption within the banking sector as a supervisor. So as part of our work from a supervisory technology, SupTech perspective, I've always been asking whether there can be more agile way to get information ready. So some of those things, we read a lot of documents, annual reports, etc. But sometimes we get some of the information like structurally extracted. But geopolitics, a lot of like latest risk events and developments are requiring us to extract within the next hour or so, new information that we know that there is sitting within all these reports that we have in our repository, but we may not have a fast way to do it. So I will give it a test. I actually asked my OpenClaw implementation is publicly available, like annual reports that I'm trying to ask it to download, and then ask it to just help me convert it into a searchable, embedding in memory or vector database, whichever you think is appropriate. It just spent about 10 minutes. And it already helped me to extract some of the latest topic that I wanted to help me with. So I was asking my team to see if we can set up infrastructure things that then quite some time has been spent. Of course, there's not more an exploratory initiative, so not a priority. So it didn't realize after a couple of months. But once I have that OpenClaw capability, I actually was able to experiment with it in maybe like 10, 15 minutes. So I think the future, there will be a lot of more like conversation, discussion, talking to AI. I have by training, I was actually a designer. So back then I studied like communication studies. So that's like 20 years ago. So in the communication theory, there is something called intersubjectivity. I think that's something that's very important when it comes to communication. And also when we start talking about, communicating or interacting with AI, especially when it comes to risk management. So this intersubjectivity from the domain of like communication is about shared experience. When we communicate, we have a shared experience that we're connecting the two persons in the dialogue. So an interesting example I have is that like 10 years ago when I first get married with my wife, start tidying up house, etc., and then start finding things that I can't really understand suddenly. So something like this, as you mentioned in Cantonese, something that bring these utilities out. So bring it out to where? So it was like in Cantonese something like 擺出去廚房. Then but my usual saying is that 攞入去廚房. So whether it's like get it outside or get it into the kitchen, I think it depends on their upbringing, whether how you set perimeter, your relative position kind of upbringing, how your parents usually talk to you. So that first time I was a bit confused. What are you talking about? Where do you actually want me to do? So quite a few of these instances about like communication when you think that it's just like a 3-word instruction, you assume someone will know it. But that's not the reality. There is an important concept of intersubjectivity. You need to make sure that you have a shared common ground experience. So when it comes to risk management, it's especially important. Because when you are starting interacting with AI, you actually need to make sure that the AI is understanding and sharing the same principle direction that you have. Sometimes I think from a scientific perspective, risk management can be quite objective. Supposedly, you do calculation, you do all these maths related to different risk management principles. But at the same time, risk management, when it comes to decisions, there are a lot of judgments. For a bank or for a financial institution, when you implement any risk management framework, even back then without AI, you have to make sure that there is a shared culture, there is a shared language, there is a shared appetite. So these are things that can be very subjective. And the importance of having AI to be ready for your risk management within your own institution, that intersubjectivity is very important. I was recently reading a book. There's a book that is complaining that AI is a hype. It was one of the authors is actually a linguistic profession. So it's basically saying that AI, because it's just trained on text, it won't possess any intersubjectivity. So there is a kind of a challenge that it could be quite impossible for AI to understand what your intentions are. But at the same time, we can argue on the flip side, because AI has been trained on so many languages, texts available from the internet. It kind of captures different intersubjectivity elements within it. But the important part is because it's still, it's a model, it's a system. You have to be able to anchor it to the right point that you want it to be. So that intersubjectivity is about, it could be the prompt engineering process, it could be how you develop your AI system so that you make sure that when it comes to having the AI tool to help you, assist you in making all these risk decisions, it has to be having a common ground, shared experience, risk appetite. I think these are the things that are important. We can't just expect the AI to, follow that three-word instruction and expect it to be performing or suggesting decisions that is totally aligned with your thinking and belief. I think this is a very important part. So when it comes to risk management using AI, I think there are all these important elements. How are we in the in this agentic form or in all the different implementation of AI? How can we blend in these with language into the system? I think that is a very important part. And of course, knowing how the AI perform is important. That's why I think we have last year launched a project called Project Noor. You've heard of it. It's actually, the HKM is doing it together with the Bank for International Settlement Innovation Hub in Hong Kong, as well as the FCA in the UK. So what we're trying to do is to look through the black box of some of the AI solution, including potentially some of these like large language model, whether we can build an explainability toolkit. Basically trying to see how we can explain some of the outcomes, some of the suggestions, some of the text that are being generated from all these different models. Because this is an important part for that, to set that intersubjectivity alignment that is important for risk management. We have to understand where it's coming from, why it is not making the same decision as if I were the AI, what might be if the AI were me, why they are not making the same judgment or decision as I do. I want to look into some of the explainability concept. So I think that's what we are looking at. And like what we just mentioned, a lot of these AI are trained on like multi-persona. The girl is trained because of the internet. There are recent studies that are saying that you can actually try to probe and then detect whether there is a persona drift. We're trying to see if we can incorporate that into the explainability toolkit. If we expect the output to be generated more from a persona of a financial risk management professional, if some of the prompts or some of the hints are starting to create a drift, whether it becomes something else or going into a persona that we're not expecting, then whether we should stop that conversation, whether we should rectify it, what are things that, these are the guardrails that we will have to consider. But of course, we need the tool, we need the transparency. We need to know how these models might be behaving. So these are some of the projects that we're trying to do. I think this is on the interfacing of when we have to interact with an AI. So when it comes to intersubjectivity, I want to share three key interfaces where we also have to consider these kind of connections. So the first is with our own supervisors, our colleagues. So I think if some of you are from the banks, you may have feel the pain of some of our colleagues calling you, asking you questions, and then all this supervisory activity. When it comes to AI, it's something very new for our colleagues as well. So these first common ground that we try to set with our own colleagues is to also have them to experience how AI could actually help them with their supervisory work. So these are part of our supervisory technology, SupTech journey. We're trying to build tools that can do the risk assessment. We have gathered all good experiences and feedback from our own colleagues, so that our colleagues themselves have also been involved in the process of using AI as part of their supervisory processes. So I think that is important on the first common ground. We're setting common ground with our own colleagues, the supervisors that are doing day-to-day work, and including looking after the AI implementation. The second interface is with other regulators. The other financial regulators, we also need to share a common ground and a common language. That's why earlier this month, we have expanded our GenAI sandbox. If you heard of it, it's kind of like a control environment to test AI, GenAI solutions. Back then, it was with us and usable by banks. We've recently expanded so that we are working with the SFC, the Insurance Authority, the MPFA, so the other financial regulator other financial institutions can now also make use of the GenAI sandbox to test all these risk management parameters within the banking context, within a financial services context, and more importantly, to share experience across different sectors, and including the regulators themselves. So that's the second interface. The third interface, then the last interface I would like to touch upon is with the industry. So what we are communicating with the industry, I think one latest message has been quite clear. Other than making sure that the AI system are robust, risk managed, are controlled, I think these are the foundation that we definitely need, and that's why we have the GenAI sandbox to test all these different parameters. But there's one thing that more focusing on the time horizon. There was a recent speech by Carmen, Executive Director of the HKMA, looking after banking supervision. And in her speech earlier, she actually mentioned the term about fail fast. So how in the digital journey, in the digital transformation evolution, how we can fail fast. I think these two words seldom comes from a supervisor. Allowing things to fail is already quite weird. And asking it to fail fast is even more strange. But I think this is also conveying the message about the time criticality, how important it is to start acting so that we are allowing certain things to fail fast in the control environment. And the other time horizon is a longer term perspective. So we have recently another circular or reminder that we have issued to the banks is actually a circular asking banks and their board of directors to critically review how banking services will look like in the digital transformation era in the next 5 years. Would it still be the same revenue model? Would it be the same kind of products and services? So we're asking all the banks to come back with a business plan, have it endorsed within 6 months. So we are looking forward to what are some of the banks thinking about when it comes to having the AI handling all these different processes, having for example, blockchain and tokenization to handle the transactions and asset tokenization. What might be some of the new things that could never been done before because of risk management, before operation, etc.? What are the new business models that could evolve from the evolution of technology itself? So this is the time perspective that we are also asking the industry, the banking sector, to have a think. What are the new things that can be done and enabled by all these new technology? So to conclude, these common ground, common languages we are trying to set within our own colleagues, our own fellow supervisors, the other regulators, and also with the industry is an important common ground that we try to set. Because it's only when we kind of converge in terms of these common ground, we share a common language, we share experience, that we can have the AI development in the speed that we want it to be in order to drive Hong Kong as an international financial center with creativity and innovation. So we look forward to hearing all the sharing and insights in the session, and we look forward to working with all of you. Thank you.
So, thank you so much. First off, thank you, Ted, thank you, Dan, and also the ASTRI team for having us. My name is Neil Tan. I'm the founder and chair for AIHK. So just out of curiosity, I usually ask this question: how many people have heard of AIHK before? Yeah, exactly. Yeah, we need to work on that. So a little bit about AIHK. I mean, it's essentially, when we looked at this association, top side of the market inside of Hong Kong had great associations in technology, bottom side great consumer, but in the middle where the corporates and institutions lie is really where the gap is, and that's where AIHK plays, right? So I think another show of hands is how many people think that AI has been a 2x multiplier in their productivity? How many people have felt that? Is AI a super technology in terms of everybody's perspective? I think pretty much yes, right? I think universally, probably 90 to 100% of the people in this room agree as a user or a consumer that we're at 100% agreement that this is the most amazing technology in the world. But inside of a report that came out of MIT, you say 95% of all corporates and institutions say it's a failure. So somehow there's a mismatch between our experience and also the corporate and institutional experience. So this is where AIHK is trying to bridge this gap in terms of adoption, utilization, and commercialization of these different types of technologies. Now, originally what we were looking at was how do we actually drive for Hong Kong to become a global AI hub? And that mission continues to be at the top of the pyramid, if you will. But later on, we'll talk about centers of excellence and how we develop that going forward. So what are the key pillars inside of AIHK? Is really this areas of policy, or what we call as PEC, policy, ecosystem, collaboration, and knowledge. So policy is obviously working hand in hand with the government, with folks like Alvin and so forth, and whatever jurisdiction, whatever market segment it could be inside of logistics, it could be in transportation, it could be labor, welfare, so on and so forth. Ecosystem is more of working with people like ASTRI, of course. How do we build up together this entire ecosystem? And the third is collaboration and partnership, is the connectivity between corporates and also these different types of startups. And last but not least is really knowledge and education, which we continue to do in terms of different events, in terms of different white papers, and so on and so forth, right? Let me just press this down. Nope. Not good. So the way that we approach the market is to be basically sector agnostic. We're a technology association. We believe in cross-sector representation. Not only that, but learning from each other. Being sector specific at this moment in time actually will limit the exposure in terms of the types of innovation that you actually see inside of the marketplace. So we believe, whether you talk about the balance between innovation and regulation, that in some ways, the less regulated sectors will come up with more innovation. No offense, Alvin, or anybody else that's a regulator here. So we believe that, we've known each other for a long time. So we believe that there is a very strong balance between these two, but then in less regulated, let's say retail, consumer, all these different areas, logistics, transportation as well, there's different use cases that could be learned inside of financial services. So we've introduced an entire team around this. It's not going again. Okay, so what we've been able to do in the last 12 to 18 months is really build out the team. So if you kind of back it all the way up, if you look at Silicon Valley and a guy named Mark Zuckerberg, he's walking around Silicon Valley handing out checks or offers to different individuals, one person for $1 billion, right? So what we believe right now is that AI is not just about technology. Of course, the technology is extremely important, but the people behind it is really key. And so when we looked at the building out this association, it wasn't really focusing on the technology. It was about the team. And inside of the team, we have about 50 practitioners of AI. So, 20 are inside of the board, another 30 are inside of the committees. And inside of the board, we had a very strict criteria. We said, they have to come from Hong Kong top 100 companies. They have to be C-suite executives. They have to basically own the AI strategy and execution inside of their organization. So inside of that team, we have people from AXA, Prudential, we have JP Morgan, we have Stan Chart. But aside from financial services, we also have Hong Kong Telecom. We also have Li and Fung. We have Clifford Chance, Meta, you name them, and Animoca Brands, which is a big Web3 player as well. So we're driving against all of these areas because we do believe in this cross-sector approach and learning from each other. And in fact, if you know Dominic Maffei, he's the former head of FinTech for Stan Chart. He was on our board. And in the very first board meeting, he said it perfectly. He said, everybody shared their different use cases. And he said, I learned so much from hearing what you guys are doing. I'm going to see what I can do inside of SC. But the truth is that without AIHK as the platform, I would have never met you, right? So there's no reason for him to meet HKT or Li and Fung or Clifford Chance, except for they're outside of maybe having a beer or something like this. But I think ultimately that's really where the value proposition for AIHK is in terms of developing this ecosystem. There you go. So how we've actually built out the committees is we've got roughly 16 different committees inside of the association. And what we want to do is we broke it down into financial services and also inside of general industry. So financial services, what we call as ABC, so asset management, banking and finance, capital markets, insurance, reg tech, and then also what we're deploying right now is digital assets and also Web3, because obviously Hong Kong is positioning itself inside of this space and developing the continuity between AI and also blockchain. So if blockchain is the body, AI is the brain, and somehow these two technologies need to be fully integrated inside of the space. The second piece is really talking about general industries. And we have people from Pfizer, for example, for healthcare and life sciences, the head of AI for that. We have people from legal profession, logistics and transportation. MTR is also inside of the association as well. So a lot of different players are represented inside of the general industries, and that's where a lot of the key use cases are coming from, and that cross-pollinates inside of financial services when we take a look at the matrix. So there you go. Separate to the associate, in addition to the committees, we have two different councils. So the councils, one is obviously Women's Council, which is really talking about the gender gap. And I think that has always been a pressing area, especially in terms of technology sectors. And how do we close that gap in a very structured and organized way? The second thing is talking about AI Safety and Governance Council. And that is really, there's 15 different professors inside of that council that are driving this responsible AI adoption. So when we look at the teams, we've got pretty strong representation across the board as far as the women are concerned. But these are all about councils. So it's different from the committees in the sense that the committees are deploying sector-specific topics, doing mostly events. But when we say councils, they have a lot more degrees of freedom to develop different programs. It's almost like an association inside of association. So you'll be seeing a lot more things like internship programs, all this type of mentoring programs that are going to be coming from these different councils as well. And separate to that, when we talk about the AI Safety and Governance Council, it's not going again. Oh, there it is. Okay. AI Safety and Governance Council essentially has 15 professors from different universities. And essentially, when we looked at this construct, we said, we want to have strong representation across the board from all of the Hong Kong universities if possible, with a specific focus on AI. So all of these people are subject matter experts inside of AI. Now, when we talk about the different disciplines that they represent, I like to illustrate it as hard to soft, soft to hard. So we have people that are professors in law. We also have professors that are in philosophy. We have professors that are in data science, and we also have professors that are in engineering. So we cover the full gamut when we look at different areas and develop it. Essentially, what we're driving for this team to do is to develop different guidelines to extend the roadway, not to put obstacles inside, but extend the roadway for corporate and institutional adoption of AI. And ultimately, I think that this type of different lenses will come into play as you see what's happening right now. Because why is there so many different philosophers inside of this team is that this type of critical thinking is coming from more of the liberal arts space and less from the technical arts space, right? Or sciences and so forth. So you're seeing that change actually evolving inside of this governance model. And just a few more of the professors inside of the team. So data science, computer science, and so forth. Yep. So now we talk about a little bit of course, looking at Hong Kong's AI governance baseline. So there's various topics that are consistent inside of this space where we talk about what are the 8 pillars, if you will, right? So when we talk about governance structures, risk management, data protection, transparency, human oversight or human in the loop, whether you talk about security and incidents management, ethical principles, trust and transparency, I think these are all quite standard, whether you talk about universally inside of Hong Kong or outside in other international jurisdictions. Now, when we take a look at what are sort of the common pieces is operational control. Still has this technical or systematic approach, which I think all of risk and compliance always has, but somehow that has to be upgraded in terms of its adoption in terms of Gen AI and how we look at it as a jurisdiction as well as other jurisdiction and benchmarking those jurisdictions. So what we are doing inside of the Association for the Safety and Governance Council is looking at these different benchmarks in terms of the EU AI Act, NIST, UK, OECD, and so forth, other jurisdictions, to benchmark those and then develop these new guidelines going forward. So we're looking at targeting to launch that within the first half of the year. We're going through different iterations internally at the moment, but we do believe that there is significant collaboration opportunities between ourselves and the rest of the ecosystem. So obviously we talk about responsible, oops, did this go through? Let me just go back. So we're talking about responsible and trustworthy AI. Folks will always talk about responsible, but trustworthy is really how do you implement it? What are the rules inside of the game and internally inside of the models and so forth? So whether you're talking about internal governance or external governance, I think a lot of people think about it on the external front because that's more faced to the customer and to the different users, whether it's transparency, standardized reporting, or third-party governance. But internally, obviously, we have to have different controls, and whether it's a pre-existing policy that's inside of the corporates and institutions or lifecycle management, because even if you see OpenAI, they just recently sunset Sora. I mean, that's also a very key point that, what about all the different users on there and how do you transition them to other places, right? So ethical practices is obviously always going to be front and center in terms of the development. So now we transition to a topic that Alvin was talking about. I didn't realize that he was doing this, so this was not a setup, okay? So we are working on a short report talking about OpenClaw. Obviously, this is the latest and greatest. I mean, everyone's been talking about agentic AI all the way through, but in the way that we need to, how does Hong Kong actually manage this? And we'll be publishing this report in the next few weeks. But essentially, how do we actually work with this going forward? So again, a lot of these different elements, when we talk about the risks and compliance, if you think about it, there's no difference actually to the front end where we talk about safety, security, malware risk, obviously opening up all your different applications inside and giving access to this has a fair amount of risk profile inside of it. I would say that since we're inside of financial services, it's the difference between a professional investor and a retail investor, right? So if you're using OpenClaw, you better be a PI, right? Because there's a lot of different risks inside of it. Data collection, data privacy, operational reliability, accountability, explainability, of course, ecosystem fragility is ultimately where it could actually infect beyond your existing environment. What we see inside of this space is pulling back to 30,000 foot level. If you really look at the adoption rates of OpenAI, essentially you're seeing China as the leader in terms of instances. Somewhere around 3.2 million instances versus the US at 2.8 million instances. So you're seeing it just across the border, a lot of activity inside of this. And I think if you look at how many people are actually visiting the website and so forth, US is still number 1, India number 2, and China is number 3. But still, all those different builds that are happening on that platform is growing significantly. So we need to be aware as part of China and the ecosystem to safeguard our infrastructure this way. So thank you so much for your time.
All right, thank you. My name is Jürgen with HSBC, as we heard. Also with HKU, HKUST, do a bit of teaching and sharing. And today I would like to share a bit about risk management of AI versus AI for risk management. We had a lot of considerations how AI can help with risks, how we can sort of assess this. I don't want to forget the point that AI is also a source of risk. It is introducing new capabilities, of course, but it's also sort of a problem space in itself, and this is what I would like to put against each other. Okay, so AI as a risk mitigator, what do we do? And I have a few examples. In bank, how does AI actually help in the assessment of risks, in the reduction of problems, especially in financial services. And AI is a risk source, and there's actually then also two aspects to that. One would be introducing novel risks through the AI itself, the capabilities of AI, the hallucinations of generative AI, for example. And then also, in addition, the factor that the attackers of financial service, they can use AI and increasingly do so in order to sort of fabricate new threats against the banking system. So a few ideas around, say, how does AI help in detecting risk? We, HSBC, have been quite public about this in the past. We have a dynamic risk assessment tool that looks at transactions. We do have quite a few, 980 million transactions per month. I still don't understand, when measuring that, why no one has put another 20 million in that month just to cross the next order of magnitude. When you do assessments, you always have false positives and false negatives. And the ones that are hurting a lot in efficiency questions are the false positives, because they are actually okay transactions, but you somehow block them and you have to investigate and positively detect them as, they are okay, they are harmless. So reduction of false positives is a very, very big efficiency gain if we are working in that space. Other examples here for credit risk, and AI helps to analyze many, many more data points than maybe in purely traditional original models. Some real-time monitoring will become possible. That's also something that in the bank we are working on, real-time, even call monitoring. Yeah, what can you detect when you sort of listen to a customer call? Algorithmic trading, excuse me. I think we know about these opportunities that we have if algorithms are trading, leading to another risk of that. We come to this a bit later. Generative AI, enhanced capabilities, text operations. I try to avoid text understanding because in my view AI still doesn't understand anything. But we can analyze documents. For example, JP Morgan reviewed legal documents to assess and identify risks, transaction risks that they just undergo within the legal framework. Compliance automation, reduction again also in false positives. In the bank we have a compliance chatbot where staff can actually ask policy questions, especially with all the regional differences that we have in an Asia environment or in a European environment. There's a lot of sort of help that a policy chatbot can bring to the day-to-day work of individuals. Risk assessment, automated extraction from unstructured data, also a domain that is now accessible. Yeah? Machine learning in the past, AI in the past, very often on very standardized data sets to make them accessible for learning. With generative AI, we can look into the unstructured data, into text, into other sources that are usually not necessarily easy to harvest from with AI. Agentic, the topic of the recent weeks or months, but also the question of, if we are using this, what does it mean? How can we sort of make sure that agentic AI is staying within the bounds that we want it to be? Yeah? Can we use self-monitoring systems? Can we detect deviations in the active perimeter of activities before, first regulators identify them, but we want to identify them first. Yeah? If you just think about agentic as independent, more or less independent actors, whenever you have actors depending and reacting on their mutual outcomes, you get a very, very complex system, and that spins out of control rather quickly. We have that in physics. If you see a double pendulum that has very quickly very chaotic states of its existence. Yeah? Why would interdependent agents be so drastically different? We need it to be different, so we need to work on understanding how to how to monitor how they act, how they interact, and keep that in a safe environment. Sorry. Real-time risk scoring, of course, also something that is accessible if we have a bit more independent, autonomous agents working on this. Automated controls, you can set your controls at the start of an activity and have the agents continuously monitoring them. Now that was how AI helps with risk management, risk reduction, efficiency, applying risk mitigation through people and helping them in their daily work, for example, through the chatbot that I mentioned. But we also see that traditional and generative AI, it introduces risks. The standard risks that we already know, model risk, bias in training data, privacy questions that we have in that space. Gen AI introduces hallucinations, the fact that it very confidently asserts the user of some information that actually is not true, that was never in the training data as such and doesn't belong to the context that we are talking about. We have operational risks where people are over-relying, or completely mistrusting the output of AI. And if we don't have the proper human oversight, human in the loop, human on the loop, these keywords, then we run an operational risk. Yeah? And we have reputational questions around this. If we have sort of customer-facing situations, customer-facing chatbots, if they have hallucinations, if they get something wrong once, a financial institution might be in the newspaper next day. Yeah? So there's a very asymmetric risk profile compared to attackers who are using AI, who only need to get it right once and then have something that they can use for an attack. As a bank, you need to get it right all the time, and you need to detect attacks all the time. New risks from agentic, just for completeness without sort of too hard elaborating on this. Runaway agents, I said there's interdependency. If we have limits set, you hear reports, Alvin was very much elaborating on the risks and how confined the compartmentalization needs to be where agents run. But imagine you give your agent a spending limit for accessing information on the web, for example, or for buying things as a purchase helper. Yeah? How do you control this? How do you manage that it stays within a range, within a reasonable range, that the human machine alignment that you next morning when your agent has done all the shopping overnight, that you consider as, oh yeah, that's what I would have done, or what has happened here, why am I poor now? Questions around this are very important. Misalignment of goals. We had it as an opportunity in the algorithmic trading, but it is already seen for several years as a herding risk against financial stability. If agents sort of either independently trade with each other, or if they are sort of colluding actively or inactively, that is a risk activity that we see, flash crashes, bank runs caused by agents sort of interfering with each other. One point that I wanted to make is also around the deepfake opportunity. Yeah? Foreign actors or criminal actors using AI, generative AI, to create maybe credentials, to create information that is not real. So all the KYC, know your customer onboarding processes that based on I see a face, maybe even on just via video identification, I see an ID card next to it, I can sort of identify that's the person in front of me. that is at risk as a procedure, because all of this can be simulated meanwhile, so that several of these activities are not as safe as before. And another point, say what I just mentioned is attacking a process of the bank, this KYC process. The other part would be, as we have also seen it in the deepfake scams last year and the year before, attacking customers of a bank. Yeah? A customer is being actively scammed. A customer thinks he or she is in a video call with maybe accountant department or with the CEO, CFO of a company, and subsequently they are instructing the bank to make a transaction. The person is authorized. The transaction from a bank perspective would seem totally legit because it's an authorized person giving an authorizable instruction. But the person was scammed in a scenario. So there's still, of course, incentives for us as a financial institution to look into such pattern, to try and identify, could it be that our customer is in distress, is scammed, is acting upon such a deepfake scam in the background. Even the bank itself is not exposed to it. So there's new attack vectors coming around. And as I said, that only needs to work once to cause a big problem. Yeah? What is the response? Neil also mentioned a couple of risk management frameworks. The NIST EU AI Act as a bit more prescriptive framework with a particular risk tier classification, all the way up to high-risk situations where the use of AI is basically prohibited, is banned if there is a high privacy or personalization risk involved. ISO norms around this, the OECD principles, that's sometimes the godfather or godmother, very often the baseline for definitions of AI and for baselining transparency, explainability, accountability. So these topics always or very often go back to OECD principles. So looking forward, what can we do in financial services? Of course, adopt AI. It's a technology, it's a theme of our times. We should be working with this, but we need to be sure that we understand the risks and that we mitigate them in all the three aspects. One is, how can we mitigate financial services risks with AI? Which risks do we introduce by using AI? And what can our, say, enemies, criminal attackers do when using ever-increasing AI capabilities? We need to embed these controls that we come up with by design, not as a, oh, at the end of the day, we also should include something about risk defense. That must be right from the start, as always with cybersecurity and these topics. And monitor continuously. Also mentioned before, the drift that you might have in models. What if an underlying model is not available anymore and a system needs to be lifted to a new version of a foundation model? How do we support this so that we are not sort of dependent on or locked into certain model versions, for example? So a number of items that we have to consider. We are working on all of them hard. We have a dedicated governance capability in the bank. We do research. We do talk to the big techs, to the startups, to everyone, to the associations in Hong Kong. Can do more on this. Neil, I'll speak to you. So that's what I wanted to share about risks of AI and AI for risk management. Thank you.
Good afternoon, and thank you, Ted. Thank you, Astri team, and Dan. Thank you for invitation. So we've talked a lot about the risk management and kind of the dangers and pitfalls of AI in the financial services realm, right? Now, one of the things I want to just put on screen, the text, yeah. So may need a bit of help. So there's a $1 million questions that when we think about risk management, let me get it on the right slide, is go back to the basics, right? Should you use predictive analytics, which is not a new term, and versus generative AI in any risk decisions? And the market talks a lot about the novelty of AI, and it creates a lot of strategic misalignment between capability and the actual business application. So for risk decisions, you think about credit scoring, fraud detection, AML monitoring, you need predictive analytics. I think that's number one. And the technology itself is mature. It's built over a decade of production deployment in regulated environments. Now, you look at some of the attributes. One thing I will call it is the autonomous execution at scale. You think about, like, once validated, the system can process thousands and thousands of decisions hourly without human intervention. So you think about loan approvals, fraud detection, credit scoring. And predictive analytics, because it's anchored on historical data, it's regulatory compliant by design, number one, and from an operational efficiency perspective, you also see there are lower costs. But there are certain difficulty, and it's harder to use well versus generative AI. Now, the other angle here is then what is generative AI good for? So we talk about emerging for content, but I think from the presentation from Alvin, Neil, and Dr. Ramal, there was a lot of talk about hallucination. If you use it in financial advisory, there's a risk of mis-selling, misinterpretation, many kind of risk guardrails. And the notion here is it requires human validation. For every input you put in, you need a human eye. And is that a kind of an economic, the economics don't really support that sort of validation that you need. So explainability also becomes a problem. I think, Alvin, in your opening, you talked a bit about that explainability toolkit, what needs to happen to peek into the black box of what Gen AI is. So that's one thing. Now, if we take a step back and look at the evolution of AI, there are many, many terms here, right? You look on the left side, there's the analytics part, there is the NLP, natural language processing, computer vision, RPA. So we're not foreign to any of these. And you look at how it has evolved in the last year or so. Predictive analytics remained front and center, that value generating. When you talk about return on investment for risk-centric decisions in the finance field. Generative AI, a lot of experimental kind of use cases, and the MA, I guess, with the Gen AI sandbox and the 2.0 and what that really affords for people to kind of think through the future of that. And then there's obviously the big talk around agentic and OpenClaw, and Neil, you were talking about that study that's going to be coming out shortly, right? So with the multi-agent thing, what does it really mean? Kind of guardrails, controls, and what ifs, right? If you deploy it in an enterprise environment, security risk, and a lot of things you need to think about. So if I go to the next slide, right? One of the things about financial services, it boils down to risk pricing. And what do I mean by that? If you look at conventional collateral model, right? You essentially exclude a lot of viable counterparties because systemically, it misprices risk. And I think that's a key thing, right? The World Bank has a statistics that globally we are leaving 5.7 trillion US in addressable market opportunity because of the legacy model. And there's a huge SME financing gap. So conventional model, you look at collateral secured lending, it'll give you 2 to 4% for physical asset holders, and secured easily skyrockets to like 20+%. So a lot of high risk segments without physical assets, you are systematically rejected. Now, the flip side of this is an AI-driven model. It has the ability to do real-time viability assessments, looking at cash flow pattern recognition, for example. It can do customer concentration metrics. It can do like seasonal trend identification. So many things that goes on. So the pattern recognition here is key, right? Because it preempts fraud detection. So you do it kind of from a preventive lens, identify the anomalies before things happened and the losses actually materialize. And I think the other good thing around the AI-driven model is there's the whole thing around financial inclusion as well, which is one of the objectives when we think about building up the financial industry in Hong Kong. Now, what I want to show here is when we look from an enterprise perspective, you look at the few big buckets. There's the channel, the customer layer, the product operations, and the enabling backbone. There are a number of areas where, or sweet spots, where AI use cases have been deployed with, be it efficiency or effectiveness and cost-saving kind of gains, right? You look at virtual assistants, supporting customer onboarding, like product selection, various things. And we have seen evidence of it really uplifting the service to sales success ratio. You look at AI-enabled treasury here, which is analyzing a large amount of sentiment, market data to really support market risk management, et cetera, et cetera. So what I want to highlight on the right is where AI can have a real tangible value is in AI underwriting. So how you leverage the internet, big data to enable alternative credit assessments. And you look at kind of the stat here, right? Like producing yield at 18% and controlling non-performing loans below 5% for some of the examples, clients that we have served. So I guess the key point here is then how do you regulate? Because there's so many opportunities with use case deployment in an enterprise, in a bank. How do we think about from a regulatory angle? And it goes back to, I think, Neil, you talked a bit about the trustworthy AI aspects. So one of the things is it's more than just security and controls. When we talk about trustworthy AI, we talk about 6 integrated capabilities that needs to happen. So first you have your security, which is how do you protect models from attack. Financial institutes are high value targets, number one. Number 2 is all about fairness. When we think about the opportunity with Gen AI, how do you demonstrate your model don't discriminate? Be it age, race, and and intentionally injecting those kind of parameters, right? That's the second leg. The third leg is around privacy. So even fundamentally in Hong Kong, you look at PDPO. How do you handle customer data within AI ecosystems? And then the fourth leg is around explainability, which is how you peek inside a black box and be able to prove and substantiate the decisions that you make. There's also robustness, how you ensure the model performs consistently across the different market conditions, not just on the historical training data. And then finally, like underlying all this is around governance. I think that's often an overlooked thing when deploying AI in enterprises. Who owns the model? Who approves when the model trips? What happens? What's the escalation path? So do you have an incident response protocol as well? And can you really demonstrate it to the regulator when you get audited for a lot of decisions, right? And that's where the whole notion of XAI or explainable AI comes into play, right? And it's essentially the first question that the regulator will come to you. Why did your model reject this loan application? And if you can't answer that with evidence, with quantifiable, verifiable, auditable evidence, then you've got a problem. So what this is, right? There's, in a layman speak, sufficient level. What does that mean? So how much explanation is enough when you think about the transparency and looking under the hood for an AI model, right? So it depends on the use case, depends on the regulation. So a credit rejection needs a lot more explanation than, let's say, a marketing recommendation, right? You look at technique. Technique is which explainability technique will you use to kind of talk through this? In the industry, there's the sharp values, there's the line interpretability aspects as well. And then everything is all around the metrics catalog. So when you think about your catalog, essentially it's your evidence library to explain to the regulator around the model and how it functions. And of course, there's comparability across model applications, so you don't deploy one single unified model in your enterprise. So there are different models, and can your explainable AI framework apply across the board for your enterprise? So that leads me to kind of two prerequisites when we think about AI and risk management. So there's the explainable part, which is every decision you've got to be able to kind of make sense of the outputs. And it's not just about regulations, right? Explainability. It's also for your front line. So you need to build that frontline staff trust. So relationship managers, loan officers, branch personnel, they must be able to defend these decisions to customers, and people will ask. So, and essentially this is like relationship banking driven by explainable AI, building your institutional credibility. And then, I guess, suffice to say, regulatory engagement, engaging Alvin from an MA side early, especially with a lot of the sandbox developments, a lot of the more emerging things. It's all about co-creations. A lot of things are still evolving as we speak. So that's going to be a critical ingredient for success. Now, this is my last slide. I think one of the things when we think about enterprise use case prioritization is how do you pit business tangible value against regulatory operational business risk in essence, right? If you look at the way we've kind of segmented the different opportunity areas, top left you have your table stakes. So these are necessary but insufficient because everyone is doing, applying Gen AI to enterprise knowledge management, document, image recognition, et cetera, right? So these are kind of skin in the game, the basics, right? You look at the bottom left, which is high regulatory risk, financial advisory to clients, service center automation and how you respond to clients. So these are fundamentally high risk because of, I talked about discrimination, could be hallucination, so you can't just rely on outputs from a. Now, the right side is where there is that sweet spot opportunity, where it's a high value, tangible business value and impact, and comparatively lower regulatory risk. So you see a lot of banks are talking through legacy system modernization. And even here, there's an opportunity in that transition to leverage AI to accelerate the process. Things around security operations center, credit risk memo. But the opportunity, when I go back to predictive analytics, is where that medium shade of green really lies. So getting market insight, sentiment analytics, AML fraud detection. So there are no shortage of use case. It really goes back to, for your organization, how do you measure kind of the return on investment, the business impact, versus weighting against all the risk that AI deployment in an enterprise will give you. So with that, I will conclude this sharing, and thank you, everyone.
Thank you. Thank you for the great sharing. Please have a seat. And so I was taking lots of notes while we were having this conversation, and we have fairly short time for our kind of conversation. So this is what I'll do. Instead of asking different questions, I'm going to go with one theme. And I'm going to try to bridge the themes that you all raised so that we can have a discussion. And so if I were to take one theme today that we're exploring is really the balance. How do you balance harnessing the power of AI versus control? And I think that kind of theme went through all 4 of your sharings. And so if I were to go back and kind of go one by one and build this together, it really is, I think, the best of times and the worst of times, isn't it? And so I think, we started first today. Alvin, I think, I learn something new every day in AI. Intersubjectivity, okay? So we start with that idea that, we might think that AI is a tool. But yet, even we ask a three-word instruction, we have to understand the context. And so I think that goes into very, very deeply how we might try to run that balance. So it's kind of intersubjectivity. And then, of course, in the best of times and the worst of times, we even have the regulator say, fail fast. Really, I never thought I'd hear fail fast, but maybe in the right environment. So again, maybe that duality between kind of optimization and control. So I think we started there. Thank you, Alvin, with that. Followed with that, I think, Neil, in your talk, you said many, many things in there, right? But one thing that stood out was really, how do we collaborate across sectors, okay? And if we say collaborate across sectors plus intersubjectivity, you don't quite say this, but then now how do we, it's hard enough in one situation, now we're trying to get AI across all sectors in an area where there's intersubjectivity. So kind of, again, that balance. Then I think, if I try to then go further, I think actually, Jürgen, you kind of brought it to the fore when you talked about the dual nature of AI, really. The most powerful tool that we've seen many in our careers, but at the same time, the most dangerous tool, right? At the same time, it's helping us to mitigate risk. At the same time, it's opened up a whole new attack surface, I guess is what they call it, right? So how do we do that? And then finally, I think, well, Vulcan, you said many things in your sharing as well. I took lots of photos. There's one thing I'll take out also, which is around the duality. And I think it actually is your first slide. The duality between predictive AI and generative AI, it really is quite different, right? When you're using predictive, it's okay, you want something repeatable each time, but then generative AI, you need a person in the loop every time. It's kind of a dual kind of a thing. And a little bit, I think, then you ended with that slide, that 2x2 slide, that's exactly the balance. So actually, so I think that the theme for discussion today, I think for all of you with that theme, how do we do this? You know, in the financial industry where risk control is so important, at the same time we have this very powerful tool, whether it's from regulatory perspective, industry level perspective, corporate perspective, right, kind of advisory perspective. How would you advise we run that balance? And what are some of the new trends that I've never seen a technology so fast? What are the new trends we need to be watching out for in the world where we need to make sure we have compliance? So that's maybe the theme for us to discuss in the next 20 minutes. I think that will be the theme. And then also, I think even in the short time, I'll give you all a chance. And it's great to see you all here. I'll take maybe one or two questions if I can from the audience here. So kind of if you have something to ask, it's hard to get these four experts from these different perspectives in one place. All right, so that's the setup. Who wants to go? Who wants to start and answer that question? How do you run that balance?
I can make a start.
Go. Yeah.
And actually, I would like to knock on the predictive versus Gen AI duality here, because one very important difference between those two is also what data is going in. If you do predictive AI as a bank, for example, you can use the data that you have about your customers, because you are running this model on your infrastructure with the data that you put into your machine learning model. If we are using generative AI, we are using models that someone else has been training. The OpenAIs, the Googles, all the names, Anthropics, trained with data they find on the internet. Yeah? What's the relevance of all of this for the circumstance that we want to analyze? That's not directly entirely clear. Another risk that we bring in when we use Gen AI, it's just someone's data in someone's model that we let into our door, and then we use by maybe even talking to it, chatting with it, with all the difficulties of human conversation that we have. Are we clear in how we express ourselves? So it's another level of difficulty actually that we bring in. This ease of use brings in the difficulty of misunderstanding and of what data is in it and how do we interpret the results.
If I can push on that a little bit, right? So this duality here, right? So are you saying let's use predictive and in the financial, let's maybe go easy on the generative AI, right? Given kind of, or how would you look at that? Is it by use case? How would you think about that balance there between those two tools? Maybe more on one? Does it depend on the scenario?
Yeah.
How does that relate to the financial services industry?
Yeah. I think we in the industry, we also, since the advent of Gen AI, we have learned to think in use case categories and say, if a hard analysis of privacy relevant data is required and we can work with a traditional machine learning model, and this is what we should be doing. Yeah? If we want to harness the capabilities of Gen AI, the text manipulation, this is what they are doing. They're text manipulators. They are not reasoning engines. They are not predictive engines per se. They can do text manipulation. So if we want to understand unstructured text, if we want to read a lot of documents and summarize them, that's what Gen AI can do, and that this is what we should be using it for. And there are a lot of application scenarios in sort of creating reports, analyzing financial information from others. But we need to be clear, what's the data that we want to use, what's the use case, what's the privacy requirements, and then adopt sort of that use case model and the underlying predictive versus, say, traditional versus generative AI or even agentic model behind it.
Anything to add on top of that? Different perspective. How to drive that duality? Okay, maybe Elvin. Okay, yeah. Why don't you jump in?
Yeah, we can give that a try. Because I think that was also a very important task when we do our day-to-day job. Because we were talking with some of our colleagues that have been there with us for like decades. So many years ago, it's much easier. As a regulator, we can just say no. It's okay. Just prove it to me. It's perfectly fine. Exhaust all the test case and scenarios, etc. I think the difference is that, and echoing for what the duality on the more traditional like predictive model, you kind of know that the boundaries, the scenarios, so you can get a comfort. So back then the process was quite easy. Don't come to us until you get all the like 100% tested. Then show us the result. Then we'll say yes or no. Then it's an easy task. But now I think with all these like the flexibility or the generative kind of outcome, sometimes you can't control exactly the input. You can't even control exactly the output. So it's quite impossible to say that I have exhausted all possible scenarios. So what should that process look like? If we were wearing the older hat, we'll probably just say no. Try exhaust every thinkable scenario. Then probably that's been a no to these kind of solution. So we're seeing that we do also need to adapt. So that's why I think we use an approach now is a lot more interactive, what we call interactive and iterative process, because we know that we can't come up with just all the requirements. I think some we're still receiving these questions. So if I need an accuracy test, how much, at what score you would accept it? I think even if I can say now, okay, 95%. So what's the base? How many use cases, how many scenarios you have to test in order to get the 95%? So it's very difficult to have that set out up front. So that process being more interactive and iterative is also for us to understand what might be some of the challenges, what are the things that we should watch out for. And then I think the more important part is to share that across the industry, so that back then, it's more like a black box approach. Everyone developed their own model, they fail themselves. We say no to one or the other banks, but we won't share knowledge across. But I think with these more interactive and iterative model, and that's also why we're doing that Gen AI sandbox, is because we do need that observation. It may not be exhaustive. We can't exhaust everything, but at least we get a comfort. Different people are trying it in different ways, different manners. Then what are the common factors, common failure, common controls, good practices that we can share? So that becomes the process that it's not very typical that we can just put up a hard threshold or a very prescriptive set of requirements. Just take these 16 boxes and you will be able to do your solution. So we have to do away from it in order to strike that balance.
I can add a little bit. It's very interesting. I want to add a little bit more what you said, because I think a lot of the things you're saying, I must say, I never expected to hear coming from this end, because I think in a way, in these best of times and worst of times, I think it's forced you to change. And can you say a little bit more kind of what that process was like? Because I think the way you regulate this is, even the word regulation or concept is now different. You've kind of mentioned a little bit why it's so different. You're mentioning a little bit how it's forced you to adapt. Can you say a little bit more about when did this realization come about? And kind of what was that process, and with things changing so quickly, right? Because I think what you're doing, you're setting a bit of the game rules in this industry for Hong Kong, and then Hong Kong is a financial center regionally. How are you thinking now about, how did you reach this stage, and then what are you expecting as things change, right? Because I think, think like open cloud comes, and then who knows what tomorrow brings, right? How do you regulate in an environment like that?
Yeah, so just very briefly, how we're trying to do it, at least now, I think we're definitely still exploring and adapting ourselves as well. So what we're trying to say, the point of realization is that in the more traditional model, we're always asked, now, for example, OpenClaw, so popular. So HKMA, please come up with the specific regulatory requirements and expectation on implementation of OpenClaw. I think by the time you will see that, it's probably 2 years later, because we need to do our own research, drafting, and we are still government organization. So together we need consultation, all the formality processes. By the time you see the end result, I think maybe people are already on another topic. Maybe OpenClaw is still there, but it's already been mainstream, I'll say. So that time gap is making it very challenging, because it's with all these, like with the topic of AI, every year there is something new. It's very difficult for very prescriptive kind of like requirement to be devised in such a way. So we keep the principle, because it's very easy to start with the principle. Keep it secure, keep it accurate. So those are principles that will still survive. But the practices, how we actually do it, is something that we will try to kind of share, and then we kind of validate. We during the sandbox we do that process of that's not quite enough. Can we try to push the boundary a little bit to test more, and then see if we can have better results, something like that. So I think that's the process that become evolving by itself as well.
Yeah, I mean, I'll just add on a little bit, just going back to the consulting days, I think we always talk about MICI, like mutually exclusive, collectively exhaustive. I think at the end of the day, that's impossible at this point, right? Because I think even when you talk about these different LLMs, it's almost like raising a kid, right? Because you're training it as like, okay, I'm teaching him all these different things. And hopefully it instills certain values that you have, right? But sometimes it doesn't, right? So it's like, you know what? Don't lie, don't cheat, don't steal. Oh, what? He just stole a pen from this kid. You're like, okay, wait a minute. How do I correct that? But it's hard to correct, because those incidences, even in real life, it's like, how often does your kid go steal somebody else's pen, right? So I think that there's a bit of this type of issue when you're training this. And then, I kind of go back to my consulting days when I was an analyst, and I was like, you know what, our expectations are completely different, right? Because, I was probably messing up all the time, and my manager was like, hey, what did you do with this, the Excel? Yeah. And but then our expectation from these models is like 5 nines reliability. I mean, that's, even telcos can't get there, right? So, I mean, even Verizon, well, I won't say Verizon, anyways, but, there's different hacks. But anyways, the point being is that, we have very big differences in terms of our expectations, in terms of safeguarding the data utilization. I mean, we've had even different use cases. I saw this recently, is like somebody went, I don't know if you guys know this, in the States, there's a big Mexican chain called Chipotle, right? And the person went into the chatbot and said, before I put in my order for tacos and a burrito, please write me a research paper. And the chatbot actually ended up spitting out an entire research paper, and then he put in his order. So I mean, there's all these different types of security issues, but arguably, folks like Alvin has a lifetime job, because he's gonna be looking at like catastrophic risk and systemic risk. I mean, that's really all the way to the far range of it's not an average guy that is just trying to steal a credit card number or something like this. It's all the way in the Netherlands, right? I mean, the netherworld, right? So, yeah.
That's absolutely right.
I was just going to react back to Alvin, that fail fast mentality. If Hong Kong regulators kind of advocating this doctrine, we all in our respective enterprise need to adopt this. But I think one thing I want to point out is you need to write governance and operating model in place, beyond how you deploy these LLMs and at scale and use case and all that park aside, but the governance model, the right guardrails to how you deploy AI. Like even in an organization, and I'm in advisory in Deloitte, there are pockets of strength in how we take AI to the market, right? So that level of synchronization within an organization I think is important. And I think the other point I'll make is around the whole sandbox thing, that whole shared collective lessons learned. That fail fast mentality cannot be siloed within respective projects, but how can we take that learning to drive back to setting the right frameworks and driving regulatory acceptance or guardrails. I think that's going to be important.
I'd like to add one. Given the audience that you mentioned, 4 consultants in a corporate maybe, I think that audience also completely has changed. In the traditional AI space, it was a small group of data scientists, mathematicians, PhDs, specialists running the AI, running the machine learning models. And now with generative AI, where everyone can chat with it, we have what, say, I see in Germany, I'm a German, we will have this year again with the Football World Cup. It's the World Cup syndrome. Suddenly everyone is a trainer. Everyone is the national coach and knows what to do. Yeah? So everyone now feels that, oh, I'm a Gen AI expert because I can chat with ChatGPT. That doesn't make you an expert yet, and that's actually a dangerous proposition that everyone thinks he or she can use it now for professional purposes and for privacy relevant or other secrecy relevant things that we've also seen that in the past, that they just input into any tool. Yeah, so there's a lot of these privacy risks coming in from not being properly aware of what is actually happening in which model. Yeah? In financial services, maybe in other industries, we have very much ring-fenced tools inside the corporate boundaries. Yeah? This is privacy protected. But if you're just chatting with an external model that you can subscribe to publicly, that's not a boundary, a cybersecurity boundary that you should consider as relevant or secure. So this educational step in what are we using there is still a big leap for many to take.
But just maybe taking a step back and taking an industry view, right? And I think it's a step back. It's not, so we're talking about the financial industry. I'm curious what you're seeing. In general, how quickly is the financial industry moving in terms of balancing this kind of harnessing the power of AI versus control? I mean, how far along is that maybe compared with other industries? And then are you seeing some differences within the industry, right? Because I also see a little bit, even within like financial services, I see some companies moving fairly quick, right? They're operating basically under the same game rules in a way, if you say, right? Some appear to be taking very, very different perspectives, right? Some go very, very quickly all in, some are almost the opposite. And so kind of maybe from your perspective in the industries, from what you're seeing, how would you rate that? I mean, how quickly is this moving in that balance? And then how broad are the differences between different players within the sector that you see? It's for all of you. Yeah, these questions are for all of you. Yeah.
We can first start with some of our observations. So I think if we compare financial services with other industry, I think definitely financial services would be slightly slower. I think within sector there are differences as well, but there is a reason to that because there are all these regulations for a reason. We're trying to justify our regulation, but these regulations are there because.
Alvin, I'm going to invite you back to some other talks because I think, guys, normally I guess this is a closed door review. So I think thank you for sharing so openly. It's very appreciated. I'm going to invite you back, Alvin.
Video recording. So.
Excellent.
Don't send it to my boss.
Yeah.
So
thank you for this sharing.
I think even our bosses is actually now very open-minded. I think that, but then why we're talking about the regulation is because all these regulations are history and experience combined. There is a reason for why there has been that kind of regulation. It must be there is some wrongdoing, there are problems, incident. That's why we have to create certain rules so that we can follow. It's just that for the with the adoption of technologies going way too fast, whether we can now use the same pace and methodology to come up with very specific prescriptive requirement to guide the development, I think it may no longer be possible. But still, from a general financial services operations, there are regulations for these purposes of protecting consumers, ensuring availability, and then ultimately these are things that we want to enforce to maintain trust, because that's the most important part. So with that, we probably can't just just put in like what Jürgen mentioned, just put in any AI and then just key in whatever you want and then put the entire customer database in and expect the magic to get spit out from the. So from that perspective, financial services institutions will definitely be slower because the process of testing, exploring will be slower than those that let's just try. Let's just push it out, and then we can fail we can fail entirely, but then we can restart everything. But in financial services, that can't be done. The fail fast, like you mentioned, I think it comes with the controlled environment as well. I think that's the important part. So I think without trust, then there's no financial services. So I think that's the important elements that we must ensure that we have these control in place. But how we can speed up that processes, how we can find those like differentiate, like some of the firms or some of the institutions may be less embracing kind of like technology. We try to encourage what are things, because ultimately there are different business models, and for sure there are still companies, institutions that can continue to be very profitable without adopting technology, because they have a very like human touch kind of like a business philosophy. But then when in the next 5 years, will the same business model still be profitable? What is the evolving expectation from the customers? If there are other service providers can provide similar services, but with the convenience and all the speed that the growing general customer are expecting, then will the customer be shifting to another unregulated industry? I think we're observing some of these in the Web3 development as well, because the convenience, not until you sign that, there is a destroy of trust. There is like a scam or issue that, some will start dialing back a bit. But that is the process of, customer in general trying to navigate what, because I feel that convenience in some other services. My like all these like e-commerce, same day delivery are giving me all the convenience, and I would expect banks to be that fast. So I don't want to wait. I don't want to call a number and then wait for the recording. So those are things that will have to align with future customer expectation as well. So I think these are the point that we want to remind some of the banks, whether or not the business model will be valid or will still be profitable in the future.
And yet it's really so important for the reminder that what underpins the whole financial system is trust. And so I think that's at the core of why it's so important to maintain that balance. And it's so interesting also to see that kind of the general posture, right, coming from HKM is actually to encourage adoption, right, in the right way within a kind of a situation that preserves that trust. Okay. To the rest of our panelists here, how would you?
You said say key element is trust. That's one thing. The other key element is customer experience. In Europe, we have seen the bank Klarna has actually quite early postulated that they put out a customer service bot. Throughout a couple of hundred customer service employees, replaced them with AI, and a few months later had to re-employ the people because customer experience just was surface level, bottom level. Customers were protesting, were not satisfied, couldn't be served properly through the AI. Now you can say, okay, that's maybe a matter of time, maybe they were too early. You can also say they were driven by, they actually wanted to go to an IPO, so the CEO was overshooting a bit on that level. Many things always to be factored in, and I think it will balance each other out over time. I would agree, big banks are probably a bit slow in the initial phase of adoption of a thing like this, but I think we also see that once we get going, once we understand certain use case categories and how to control them, then it can actually go quite rapid at some point in time. When all internal compliance, risk management, model risk management, and so on, if they are aligned, if they are if everyone has learned how to collaborate under these new AI and Gen AI paradigms, once that engine is running and oiled, then it can actually be quite powerful.
Yeah, maybe I can just add a little bit. I think that, obviously AI in other sectors, I mean, again, it goes to the balance between innovation and regulation. So to the extent that you have, so many degrees of freedom to do other things inside of like retail consumer, for example. I mean, the use of AI in terms of augmented reality and those different things, like trying on different things, just scanning your face and looking at a different object and things like that. I think there's a lot of different other utilization use cases that could be implemented in the lesser regulated spaces. At the same time, I would say, if there's different trigger events, obviously you're looking at front office, back office inside of financial services, so way more institutionalized AI in the back office than the front office. And if there's someone that is in the front office using it, it's on an iPad. So, I mean, arguably, I think in a way, I mean, if we really go to AGI, I mean, it's more of the inferior species actually managing the more superior species if we really go that direction, right? But in any situation, I think that ultimately, I think that this type of adoption could be potentially the trigger point would be Web3. And that's why I think, especially inside of stable coins and talk about real world assets, tokenization, you can't make the numbers work in Web3 if you're trying to do it like the old way, like somebody actually writing a ticket and things like that, right? It's just not possible.
Okay, all right, that's going to be the next series.
Yes.
We're going to talk about the next phase of this evolution.
Sure
So we're going to bring you back. We're going to bring you back for the next one around this one. That's a very, very deep topic. So we're going to pause there a little bit for next time.
I was just going to add one point from an organization perspective, because I work in the consumer retail, work with luxury brands as well. The concepts of AI for all, I think it's an extremely important mindset in an organization. So gone are the days, back in the day, we know there was the chief digital officer, digital was a function. Now we were talking about AI in its own kind of task force, small project teams, and let's experiment. But how do you educate the rest of the organization? Because like my belief is AI is something that's going to be part and parcel of everything we do. It's just going to empower the way we serve, we run operations and everything, right? Like, of course, with the right guardrails. So how do you, along this innovation process, educate and bring along the mass? And that starts internally in an organization, right?
Yeah, and I think that's so right. I mean, it's true in general. I think even in our topic today, financial services industry, I mean, it's even more important, right? Because I think if we talk about security and attack surfaces, right, very often it's actually not the system. It's all the very low tech kind of coming in. I mean, so then how do the people that are using the tool, especially in an age where it's agentic now, manage that? So I think that's especially important that gets brought in, but I know it's a very, very difficult thing. I have been flashed a time card multiple times now. And so I promised all of you to give you time to ask a question, but given this, I'll have to end. However, I think we have a little bit of time after to network a little bit, right? So if you do have a question, you can come up. So I will wrap with one question to all of you, okay? And this is around the best of times and the worst of times. And I'm gonna make you choose. So in our current state, with all this technology, whether you're a regulator, whether you're an individual organization, whether you're looking across organizations, whether you're advising organizations, is this the best of time or the worst of time? Choose only one. Who wants to start? One vote only. You can't choose both. Is it the best of times or worst of times within this balance?
Best for all, worst for me.
Good answer. Okay. All right. Okay. You have chosen both. Okay. 2 tickets, 2 votes.
I think it's the best of times.
Best of times.
Yeah, let's be positive.
Best of times.
Absolutely echo. Yeah.
Okay. Best of times. 4 plus 1. How about that? With that, I want to thank all of you for what a great sharing. Thanks for sharing so openly. It's really appreciated. I'm sure that the audience here appreciates. So I want to thank you once again on behalf of Astri. We already have our next session in our mind already. Thank you.